So we saw Saudi Aramco amongst the many companies that met with President Xi Jinping on Friday. There has been additional courting, if you will, to this region of the world.
Capital, tech, diplomacy, these are all very attractive to the Middle East. There's reasons Chinese capital is flooding into the market there. The Saudis in particular doubling down on industrialization. There are opportunities across electrical vehicles, lithium batteries. I was just in Riyadh not that long ago speaking with Chinese investors on exactly these topics. There's a lot of excitement. And of course, it's not just a domestic story, but they could be using Saudi Arabia as an export platform into the Middle East and beyond.
Are we seeing a realignment of countries with President Trump now focused on reciprocal tariffs everywhere? What kind of alliances or realignment are you seeing?
Well, it's still early days. We're definitely seeing a reconfiguration of global supply chains. But clearly, Europe is perhaps more interested than in the past on opportunities in China, particularly given that growth conditions are looking a little bit better than they were 12 months ago. So I think many countries are hedging their bets, but at the same time, it is still early days, and conditions will change over the next 6-12 months.
Ben, I'm glad you raised that point, right? Because, you know, when we think about the new Silk Road, right, it's kind of roughly analogous to Belt and Road. And although, you know, a lot of the excitement over Belt and Road has kind of died down over the last couple of years, potentially new opportunities in Europe with them suddenly finally deciding that they need to spend again. It's pretty positive. I think it's worth remembering that, you know, the old original Silk Road, the end destination was actually not Central Asia, but actually Europe, right? And in this case, are we seeing Chinese companies going outbound, focusing more and more on end destination Europe, the end of that road?
We absolutely are. So the Belt and Road started out very much as an infrastructure project, but it was already evolving as long as 5 years ago with a refocusing on the digital sectors in particular. But with trade tensions clearly where they are, we've seen a wall of money from Chinese manufacturers head off into Southeast Asia, South Asia, building out new manufacturing facilities. And some of that is equally going into Europe. Partly recognizing that investing in domestic markets, generating local employment, local incomes will be key to being able to sell into those markets. And so Chinese manufacturers in that respect are behaving very similar to any big global manufacturer. So again, it's just the next step in China's trade with its old Silk Road partners, whether that's Asia or right through, as you mentioned, into Europe.